Federal Record 12K. The art dealer who smuggled cartel cash inside canvases. This file was opened on March 4, 2019, by a joint task force operating under the Internal Revenue Service Criminal Investigation Division and Homeland Security Investigations. The investigation carried the internal designation Operation Gilded Frame. It was formally closed on November 18, 2022, following the final sentencing of the principal subjects. The record has been partially declassified for public review. Names of confidential informants and certain operational details remain redacted per ongoing federal proceedings. What follows is a reconstruction drawn from sworn affidavits, surveillance logs, financial forensics, Title III intercepts, and testimony entered into the record of the United States District Court for the Southern District of New York, case number 21 CR 0774. The central subject is Mauricio Aldrete-Garza, age 51, operating as the owner and director of the Aldrete Fine Arts Gallery, located on the third floor of a landmark pre-war building on East 67th Street in Manhattan. He held a Sotheby's Institute certification in art appraisal, maintained membership in the Art Dealers Association of America, and was, by every outward measure, a respected mid-level figure in the city's secondary art market. He specialized in Latin American modernists, Rivera, Tamayo, Mata, and handled works with sale values ranging from $40,000 to several $1 million per transaction. Behind that framing, according to the federal record, Aldrete-Garza operated one of the most sophisticated art-based money laundering networks ever documented by U.S. law enforcement. Over a period of no fewer than 7 years, he moved an estimated $94 million in drug proceeds, originating from a Jalisco New Generation cartel distribution cell operating across Chicago, Houston, and the southern border corridor. He did it inside stretcher bars, inside wooden shipping crates, inside forged provenance documents, and inside the deliberately opaque pricing mechanisms that make the international art market one of the last truly unregulated financial channels in the developed world. This is how the record says it happened. The thread that unraveled the file did not begin inside the gallery. It began in a mid-sized office building in Lower Manhattan, inside the Internal Revenue Service Criminal Investigation Field Division, on an afternoon in January 2019. The analyst who opened the thread was Special Agent Teresa Delacroix Moreno, a 15-year CID veteran who had spent the previous 4 years working financial intelligence on narcotics-adjacent laundering schemes. Her methodology leaned heavily on what investigators call anomaly clustering, the practice of scanning large bodies of transactional data, not for individual irregularities, but for patterns of irregularity that, taken together, suggest design rather than accident. The specific anomaly that caught Delacroix Moreno's attention was a wire transfer record involving a Delaware-registered holding company called Sundial Acquisitions LLC. Sundial had paid $480,000 to the Aldrete Fine Arts Gallery for the acquisition of an untitled oil on canvas attributed to the Mexican painter Rufino Tamayo. The transfer itself was not remarkable. The buyer was a name Delacroix Moreno did not immediately recognize, a man in his mid-30s named Pablo Salazar Fuentes, listed on the acquisition agreement as the beneficial owner of Sundial. What was unusual was the procedural record surrounding the purchase. Standard practice in art transactions of that size involves a negotiation period, a condition report, a specialist's review of attribution, insurance appraisal, and in most cases, a physical viewing of the work. The gallery's own internal documentation, which investigators later obtained, showed none of those steps. Salazar Fuentes had inquired on a Thursday afternoon, received a single digital image of the painting, and wired the full purchase price by Friday morning. He never visited the gallery. He never requested an independent appraisal. He paid full asking price, without negotiation, sight unseen, for a work worth less than a quarter of its stated value on the contemporary secondary market, a discrepancy that became apparent only when investigators consulted 3 independent appraisers. In the language of the federal affidavit, Salazar Fuentes had paid a $480,000 premium for the privilege of owning a document that said he had purchased a painting. The painting, for his purposes, was incidental. Delacroix Moreno ran Salazar Fuentes through the standard index. He had no prior federal charges. He appeared on no watch list. His Delaware company showed a registered agent address in Wilmington, with no physical office, no employees, and no prior transactional history beyond 3 bank accounts opened 18 months earlier. 2 of those accounts had received multiple structured deposits, payments slightly below the $10,000 currency transaction report threshold, across a 9-month window totaling approximately $2.1 million. The source records listed those deposits as income from a consulting business in the building sector, but there was no registered company, no contracts, no invoice trail. Delacroix Moreno flagged the file internally and requested a joint consultation with Homeland Security Investigations. The request landed on the desk of HSI Special Agent Dominic Reyes Caballero, assigned to the HSI New York Transnational Criminal Organization Unit, who had spent the prior 2 years tracking financial flows connected to cartel-adjacent distribution networks. Reyes Caballero recognized the structured deposits immediately. He ran Salazar Fuentes against the HSI database and returned a result that elevated the file from suspicious to active. Pablo Salazar Fuentes had appeared, years earlier, in a separate DEA intelligence report as a low-level associate of a logistics coordinator tied to the Jalisco New Generation Cartel's Northeastern distribution arm. He was never charged. The prior investigation had closed without prosecution, but his name was in the record. The connection between a cartel associate, structured deposits, a Delaware shell company, and an overpriced sight-unseen painting purchased from a Manhattan gallery told Reyes Caballero something he had been trained to recognize. The art market, in the context of financial crimes, occupies a position of particular utility to money launderers that law enforcement has documented extensively. Unlike securities, real estate, or banking, the American art market was, at the time of this investigation, largely exempt from the Bank Secrecy Act requirements that compel dealers in other sectors to file suspicious activity reports and verify customer identities. A gallery owner in the United States was under no legal obligation to know who was buying. They were under no legal obligation to report a cash transaction. They could accept anonymous buyers, could sell to shell companies with no beneficial ownership disclosure, and could price works at whatever they and the buyer agreed upon, because art valuation is by nature subjective. That subjectivity, federal investigators have noted in multiple prosecutorial records, makes it an ideal vehicle for inflating or deflating transaction values to move money into or out of a clean financial record. Aldrete-Garza, the federal record alleges, understood this better than almost anyone in his position in New York. He had, investigators concluded, deliberately structured the gallery to function as a financial services operation with art as its product line. The first phase of the investigation, which ran from February through August of 2019, was a financial mapping exercise. Delacroix Moreno and a team of 3 additional IRS CI analysts pulled every available transaction record connected to the gallery, its associated corporate entities, and the personal accounts of Aldrete-Garza and his known associates. They identified through this process 12 distinct shell companies in 4 jurisdictions: Delaware, Nevada, Florida, and the British Virgin Islands, all with some traceable connection either to the gallery's transaction history or to Aldrete-Garza personally. Most of them had received funds from sources that matched the structured deposit pattern identified in the Salazar Fuentes account. The money, the analysts concluded, was entering the United States primarily through 3 channels. The first was the sale of artworks to shell buyers at prices significantly above fair market value, what investigators call trade-based money laundering through price manipulation. The second was the physical smuggling of currency inside art shipping infrastructure. The third was the use of forged provenance documents to create fictional transaction histories that provided cover for the movement of funds between jurisdictions. It was Reyes Caballero's team at HSI that established the physical smuggling component. Working through a contact at U.S. Customs and Border Protection, investigators flagged incoming shipping containers associated with the gallery for enhanced inspection beginning in the fall of 2019. The gallery received regular shipments through a freight forwarding company called Meridian Cultural Logistics, registered in Miami. On October 22, 2019, a container shipped from Mexico City through Veracruz arrived at the port of Newark bearing the Meridian Forwarding designation. CBP inspectors opened the container under a supervised examination protocol. Inside were 4 wooden crates, each documenting a painting destined for the Aldrete Gallery. The CBP team photographed the crates, recorded their manifest weights, and then turned them over to an HSI technical specialist for a more thorough examination. The specialist, using a combination of X-ray scanning and physical measurement, identified an inconsistency in 2 of the crates. The wooden framing elements, the stretcher bars on which the canvases were mounted, were thicker than industry standard by approximately 1/4 of an inch on each side. The discrepancy across 4 bars per canvas was not visible to casual inspection and would not have been apparent to a gallery professional unless they were specifically looking for it. The specialist, following the protocol established for art-related contraband searches, carefully disassembled 1 stretcher bar. Inside the hollow core, packed in vacuum-sealed plastic and wrapped in a thin layer of foam insulation to prevent detection by pressure sensors, was United States currency, banded, sorted and compressed. The total cash recovered from the 2 modified canvases in that single shipment was $940,000. The serial numbers on the currency bands were documented. The bills were photographed, and then the crates were reassembled and the delivery allowed to proceed. A controlled delivery in federal investigative terminology, so that investigators could observe the chain of custody from the port to the gallery's storage facility in Long Island City and identify additional participants in the network. The controlled delivery identified 3 individuals beyond Aldrete-Garza. The first was a man named Eduardo Bringas Vidal, a registered art courier employed formerly by Meridian Cultural Logistics, who received the crates at the Long Island City storage facility and signed for them. The second was a woman named Claudia Rios Delgado, identified in subsequent surveillance as a gallery associate who met Bringas Vidal at the storage facility and supervised the unpacking. The third, documented by surveillance photography, was a man investigators did not initially identify, but who would later be identified through database cross-referencing as Fernando Zarate Ochoa, a known logistics coordinator for the CJNG distribution network operating out of Chicago. Zarate Ochoa was not a gallery employee. He did not work in the art world. His presence at the storage facility, supervising the transfer of cash from unpacked stretcher bars into a separate vehicle, was, in the language of the federal affidavit, consistent with his role as the cartel's representative overseeing the delivery of proceeds into the laundering network. The investigation expanded significantly at this point. The FBI was formally brought in as a partner agency in November 2019, contributing counter-narcotics task force resources and their existing intelligence package on the CJNG Northeastern Distribution Arm. Title III wiretap applications were prepared and approved by the Southern District. The Intercept program covered 6 phone numbers associated with Aldrete-Garza, Bringas Vidal, Rios Delgado, and 2 of the shell companies. What the intercepts revealed over the following 4 months constituted, investigators noted in subsequent affidavits, one of the clearest recorded operational discussions of art-based money laundering methodology they had encountered in their respective careers. Aldrete-Garza communicated in a combination of coded language and direct discussion. He appeared, from the Intercept record, to believe that speaking about art transactions in art industry terminology provided sufficient cover. He referred to cash as inventory. He referred to the currency-filled canvases as new stock. He referred to the cartel's distribution coordinator as his collector. He spoke on one intercept, dated January 14, 2020, to an unidentified party about the need to move 6 units of inventory before the end of the quarter, with a valuation adjustment to account for the current market. Investigators interpreted this as a discussion of the timing and pricing structure of a forthcoming laundering transaction. Other intercepts were more direct. On February 3, 2020, Aldrete-Garza spoke with Bringas Vidal about the condition of a specific shipment. Bringas Vidal used the phrase "Los bastidores están limpios," the stretchers are clean, to confirm that a set of modified canvases had passed customs clearance without inspection. On February 18th, Rios Delgado spoke with an unidentified woman, apparently a financial intermediary in Mexico City, about the need to document 2 acquisitions for a quarterly report. The financial intermediary discussed specific dollar amounts that matched wire transfers investigators had already documented. She referred to the transaction as an investment in culture. Rios Delgado laughed. The investigation documented, through the combination of financial forensics and intercept analysis, 3 distinct components of the laundering architecture. The first was the physical smuggling operation described above, currency concealed in modified stretcher bars, transported in legitimate art shipping containers, delivered to the gallery storage facility, and extracted by cartel representatives. This was the placement phase of the laundering cycle. Dirty cash entering the clean financial system for the first time. Investigators calculated, based on the frequency of controlled deliveries documented in the surveillance record and the average cash weight recovered per shipment, that this channel had moved between $12 and $18 million per year for an estimated 7 years prior to the investigation. The second component was the over-invoicing scheme. The gallery functioned as a legitimate art dealer for some portion of its business, but a separate stream of transactions involved the deliberate overvaluation of works sold to cartel-connected shell buyers. An anonymous buyer, typically a Delaware or Nevada LLC with no genuine business history, would purchase a painting at a price anywhere from 2 to 5 times its fair market value. The seller, the gallery, would record the transaction, deposit the funds, and report it as ordinary business income. The difference between the real value and the inflated price was the laundered margin, a quantity of cartel cash that had been converted into a clean wire transfer, documented in a legitimate transaction record, and absorbed into the gallery's reported revenue. The shell buyer, meanwhile, owned an asset with a documented acquisition value that could be resold, donated, or used as collateral at the stated price, a price that now appeared in a legal purchase record. Investigators identified 23 transactions fitting this pattern over a 6-year period, with inflated prices totaling approximately $41 million above fair market value. That $41 million represented the amount of drug proceeds converted into clean gallery revenue through this mechanism. The third component was the provenance fabrication network. For the physical currency smuggling to function across international borders, the paintings used as containers needed to move through customs with complete, unimpeachable documentation. Aldrete-Garza had, the federal record alleges, established a relationship with a forger, identified in the indictment as a man operating under the alias Castillo, but whose true identity is redacted in the public record, who produced false provenance documents for works that had no genuine exhibition history or ownership chain. These documents were formatted to resemble legitimate gallery records, auction records, and museum loan agreements. They referenced real institutions by name, listed fictional transaction dates, and in several cases included what appeared to be authentication signatures from deceased appraisers whose names could not be verified against a living source. The forged documents served 2 functions. They allowed currency-laden canvases to move through customs as documented collectibles rather than anonymous packages, and they allowed overvalued shell buyer transactions to be supported by apparent expert authentication of the inflated price, a specialist's letter seemingly independent, confirming that the price paid was consistent with the work's historical significance and condition. The investigation also identified what investigators termed a secondary gallery network, at least 2 additional art dealers in Miami and Houston who had coordinated with Aldrete-Garza to process transactions on behalf of cartel-connected buyers. These were smaller operations, and the investigation's primary focus remained on Aldrete-Garza as the architect of the overall network, but both secondary dealers were identified by name and included in the final indictment. By the spring of 2020, the task force had assembled what Reyes Caballero later described in his arrest affidavit as one of the more comprehensively documented laundering networks he had seen in 16 years of investigation. The financial forensics had traced approximately $94 million in suspected drug proceeds through the combined placement, layering, and integration mechanisms. The intercept record contains several hundred hours of intercepted communications documenting the mechanics of the scheme in the principal's own words. The controlled delivery record documented the physical smuggling operation with photographic and forensic evidence. The provenance forgery network had been identified and partially documented. What the task force needed before proceeding to arrests was one additional evidentiary layer, a demonstration that the money originating in the gallery network could be traced with sufficient specificity back to narcotics proceeds. Without that link, the laundering charges could be supported, but the drug nexus, which elevated the sentencing exposure and the asset forfeiture scope significantly, would rest primarily on circumstantial inference. That link was established through a financial intelligence operation run in parallel by the FBI's New York field office. FBI Special Agent Marcus Okonkwo-Bassi, assigned to the CJNG Financial Intelligence Cell, had been tracking the money flows of the cartel's northeastern distribution arm for approximately 2 years prior to the gallery investigation. He had documented a cash surplus in the distribution network's accounts, funds generated from drug sales that exceeded the network's operational expenses and were being moved out of the distribution tier toward an unidentified laundering infrastructure. The dollar amounts and timing of those surplus transfers, when compared against the timeline of cash deliveries to the gallery storage facility documented by the HSI Controlled Delivery Program, matched with a specificity that satisfied the legal standard for probable cause connecting the gallery operation to drug proceeds. Okonkwo-Bassi prepared a financial intelligence report dated July 22, 2020, that was incorporated into the Joint Task Force's affidavit for arrest and search warrants. The report documented 11 specific instances in which cash quantities departing the distribution network's tracked accounts could be correlated with cash quantities arriving at the gallery storage facility within a window of 10 to 14 days, consistent with the transit time from the cartel's distribution cities to Mexico, through the shipping preparation process in Mexico City, and onto the port of Newark. The arrest and search warrant package was presented to a magistrate judge in the Southern District of New York on August 14, 2020. Warrants were issued for the gallery premises on East 67th Street, the Long Island City storage facility, a second storage vault maintained by Aldrete-Garza at a commercial facility in Jersey City, a personal residence in Westchester County, a secondary residence in Miami Beach, the offices of Meridian Cultural Logistics in Miami, and the financial records of all 12 identified shell companies. The arrest warrants named Mauricio Aldrete-Garza, Eduardo Bringas Vidal, Claudia Rios Delgado, Fernando Zarate Ochoa, and 4 additional individuals, including the 2 secondary gallery dealers and a Miami-based financial intermediary, identified as having processed wire transfers on behalf of the Shell buyer network. Execution of the warrants was coordinated for the morning of August 19, 2020, simultaneous across all locations. At 6:14 in the morning, an IRS CI tactical team working with the HSI Special Response Unit arrived at the East 67th Street Gallery building. The gallery occupied the building's 3rd floor, accessed by elevator or a narrow staircase from the lobby. A team of 8 federal agents, 4 IRS CI, 2 HSI, and 2 NYPD detectives on liaison assignment entered the building using a master key obtained from building management under authority of the search warrant. They found the gallery locked and unoccupied at that hour and executed entry without incident. The gallery's interior, as documented in the search and seizure inventory filed with the court, was approximately 4,000 square feet of exhibition and administrative space divided into 3 connected rooms. The front room contained the gallery's current exhibition, 14 works of various sizes hung on white-painted walls with printed label cards and asking prices. The administrative wing at the rear contained Aldrete-Garza's office, a records room, and a condition report staging area. Investigators spent approximately 6 hours on the initial gallery search. They seized the entirety of the business records, sale agreements, acquisition documents, appraisal letters, provenance files, correspondence archives, and financial records going back 11 years. They photographed and documented every work on the walls. They collected computers, external drives, a cell phone found on the gallery's reception desk, and a locked drawer in Aldrete-Garza's desk that required a locksmith to open. Inside the drawer were $1,400 in cash, a personal journal in handwritten Spanish, and a folded paper document that investigators photographed and logged as evidence item 12K Gallery E047. That document, when subsequently analyzed by a forensic document examiner, was determined to be a handwritten pricing schedule matching specific artworks to dollar amounts denominated in two currencies, American dollars and what appeared to be a separate accounting denomination that did not correspond to any legitimate currency unit. Investigators interpreted this as an internal pricing ledger for the cash equivalent value of works being moved through the laundering network. Simultaneously, a second team was executing the Long Island City storage facility warrant. The facility held approximately 30 works in various states of crating, along with framing materials, art handling equipment, and a workshop area where stretcher bars were manufactured and modified. Forensic examination of the workshop found tools consistent with hollowing and sealing wooden framing elements. Residue testing on two workshop surfaces returned positive results for the same adhesive compound used to seal the modified stretcher bars recovered in the controlled delivery 8 months earlier. From the storage facility, investigators seized 11 complete canvases in their crates, all framing materials in the workshop, and the complete contents of a filing cabinet containing what appeared to be shipping manifests and customs documentation. The Jersey City vault search was the most significant in terms of physical evidence. The vault, a climate-controlled private storage unit leased under one of the shell company names, contained 9 crated works and a metal storage case. Inside the metal case, investigators found bundled U.S. currency totaling approximately $2.3 million. Serial number records confirmed that a portion of the currency matched bands documented in the controlled delivery conducted in October 2019, the same bills photographed by investigators before being repackaged and allowed to proceed to the gallery's network more than 9 months earlier. The vault also contained a separate folder of provenance documents, 47 individual files, that were subsequently examined by an independent authentication specialist retained by the prosecution. The specialist concluded that 29 of the 47 files contained fabricated or materially falsified documentation. Aldrete-Garza was arrested at his Westchester County residence at 6:22 in the morning. He answered the door in a robe, according to the arresting agent's report, and said nothing. He asked to call his attorney. He was advised of his rights, handcuffed, transported to federal custody in Lower Manhattan, and processed. His attorney arrived at the federal building by 9 that morning. Eduardo Bringas Vidal was arrested at his apartment in the Astoria neighborhood of Queens at the same hour. Claudia Rios Delgado was taken into custody at her residence in Jersey City. Fernando Zaharate Ochoa was arrested at a hotel in the Midtown district of Manhattan, where he had been staying under a false name. Investigators had established his location through cellular ping data obtained under the warrant package. He was the only subject who required more than minimal physical force in the arrest process. Investigators noted in the after-action report that he attempted to leave through a fire exit and was apprehended on the stairwell landing of the 4th floor. The Miami arrests and the Meridian Cultural Logistics Office search were handled simultaneously by an HSI Miami field team. The financial intermediary arrested in Miami, identified in court documents as Luisa Fernanda Vargas Montoya, was taken from her residence in Coral Gables without incident. The Meridian office search yielded 3 years of shipping records, correspondence files, and a set of master keys to the gallery's storage facility in Long Island City. The asset forfeiture action executed alongside the arrests froze accounts in 11 financial institutions holding a combined balance of approximately $14.6 million across the various shell companies. The court also issued restraining orders on 3 real estate properties, a condominium in Miami Beach, and 2 commercial buildings in Westchester County, purchased by entities connected to the gallery network over the prior 6 years. The initial indictment, unsealed in the Southern District on August 19, 2020, charged Mauricio Aldrete-Garza with money laundering conspiracy, conspiracy to conduct financial transactions in criminally derived property, importation of currency without declaration, international money laundering, and conspiracy to smuggle goods into the United States. Bringas Vidal, Rios Delgado, and Vargas Montoya faced money laundering conspiracy and related financial charges. Zarate Ochoa was charged under the narcotics money laundering statute in addition to the smuggling and conspiracy counts, a charging decision that reflected investigators' determination that he was the operational link between the cartel's drug proceeds and the gallery's laundering infrastructure. A superseding indictment filed in April 2021 added wire fraud charges against Aldrete-Garza and Rios Delgado related to the provenance forgery network, and added a count of conspiracy to defraud customs, reflecting the systematic use of false documentation to clear currency-laden shipments through federal inspection. The pre-trial proceedings lasted approximately 14 months. Aldrete-Garza's defense presented a series of arguments centered on the contention that the gallery's business practices were consistent with industry norms in the art market, that anonymous buyers, sight-unseen purchases, and aggressive pricing were not illegal in the absence of specific knowledge of the fund's criminal origin. This argument tracked an established defense strategy in art-based laundering cases, and its legal coherence required the prosecution to establish specifically that Aldrete-Garza had been aware of the drug proceeds' origin of the funds he was processing. The prosecution's case on that point rested primarily on three categories of evidence: the intercept records, in which Aldrete-Garza made statements indicating awareness that his clients were not legitimate art collectors; the handwritten pricing ledger recovered from his desk drawer, which forensic document examiners attributed to him based on handwriting analysis; and the testimony of a cooperating witness, identified in the court record as CS1, who testified under a cooperation agreement about the structure of the laundering arrangement from the cartel's side of the transaction. CS1's testimony described direct conversations with Aldrete-Garza, in which the gallery owner had been told explicitly that the funds he was processing represented the proceeds of narcotics distribution, and had confirmed his understanding and continued participation. Aldrete-Garza entered a guilty plea on October 14, 2021, to money laundering conspiracy, international money laundering, and importation of currency without declaration. As part of the plea agreement, he agreed to forfeit all interests in the gallery, the associated shell companies, the seized real estate holdings, and all funds in the frozen accounts. He also agreed to cooperate with ongoing investigations into the CJNG financial network, cooperation whose scope and value the record indicates was significant to the prosecution, but whose details remain substantially redacted. Rios Delgado and Bringas Vidal pleaded guilty in December 2021 to money laundering conspiracy charges. Vargas Montoya entered a plea in January 2022. Fernando Zarate Ochoa elected to go to trial. His proceedings, which began in March 2022 in the Southern District before Judge Alicia Morales Rivera, lasted 11 days. The jury deliberated for 6 hours before returning a verdict of guilty on all counts. The verdict was notable in the context of the case's evidentiary architecture. The jury apparently found the combination of surveillance photography, cellular records, financial trace analysis, and cooperative testimony sufficient to establish Zarate Ochoa's role as the operational cartel link beyond a reasonable doubt, notwithstanding the defense's argument that his presence at the storage facility was consistent with legitimate commercial activity. Sentencing in the case was completed in 3 stages between August and November 2022. Mauricio Aldrete-Garza was sentenced on August 22, 2022, by Judge Morales Rivera. The prosecution sought a sentence at the top of the guidelines range, citing the duration, sophistication, and scale of the scheme. The defense presented, among other factors, Aldrete-Garza's post-plea cooperation and the gallery's contribution to the legitimate art community over its operational history. Judge Morales Rivera sentenced Aldrete-Garza to 14 years in federal custody, followed by 3 years of supervised release. She imposed a forfeiture judgment of $31.7 million representing his personal proceeds from the laundering scheme, a figure calculated from the portion of the estimated $94 million in total scheme proceeds attributable to his personal enrichment after payments to co-conspirators and operational expenses. Eduardo Bringas Vidal received a sentence of 6 years. Claudia Rios Delgado received 4 years and 8 months. Luisa Fernanda Vargas Montoya, whose cooperation with prosecutors was documented as substantial and timely, received a sentence of 3 years and 4 months. Fernando Zarate Ochoa was sentenced on November 18, 2022, to 22 years in federal custody, the longest sentence in the case, reflecting both the narcotics money laundering enhancement and the jury's verdict on the full scope of the charges. His sentencing marked the formal closure of Operation Gilded Frame. The provenance forger, identified as Castillo, was indicted separately in a sealed proceeding. The public record on that subject remains substantially redacted as of the date of this case file's partial declassification. Several aspects of Federal Record 12K merit examination beyond the individual events of the investigation and prosecution. The first is the structural vulnerability of the art market that the case exposed with unusual clarity. At the time of the investigation, the United States was, alongside Switzerland and the United Kingdom, one of the world's 3 largest art market jurisdictions. Unlike its counterparts in European financial regulation, the American art market was exempt from anti-money laundering provisions that applied to dealers in other high-value goods categories, precious metals, antiquities in certain contexts, real estate in certain jurisdictions. A gallery owner transacting at the scale Aldrete-Garza operated was under no statutory obligation to perform customer due diligence, verify beneficial ownership of purchasing entities, or file suspicious activity reports with FinCEN. The regulations that would have made his operation immediately detectable in a banking context simply did not apply to him. Investigators noted in their after-action reports that this regulatory gap had not gone unnoticed in the criminal world. The CJNG's decision to route proceeds through the art market rather than more conventional laundering channels reflected an awareness of the market's legal status that Aldrete-Garza's operation had evidently communicated upstream. The scheme had been running for 7 years before it was detected, and its detection had depended not on a regulatory reporting mechanism, but on the analytical instincts of a single IRS CI analyst who happened to look at a transaction involving an overpriced painting. Following the case, congressional testimony by the investigation's lead agents contributed to the legislative record that led to the inclusion of high-value art dealers in the Bank Secrecy Act's covered business categories under a regulatory amendment that took effect in 2023. The amendment requires dealers in fine art with transaction values above $10,000 to establish anti-money laundering programs and to file suspicious activity reports with FinCEN. Whether the amendment's implementation in practice will prove sufficient to close the vulnerability documented in Federal Record 12K remains, at this time, an open question. The second aspect worth examining is the operational use of legitimate cultural infrastructure as a laundering vehicle. Art shipping, unlike bulk cash transport or wire transfer to offshore accounts, passes through U.S. Customs under a documentation framework designed to protect cultural heritage, not to scrutinize financial flows. Shipping containers labeled as fine art move through CBP processing under a specific tariff category associated with cultural and educational importation. They receive a different inspection profile than, for example, industrial freight or consumer goods. The cultural designation does not exempt them from search, as the October 2019 controlled delivery demonstrates, but it does mean that the baseline screening questions are oriented toward authenticity and cultural property law rather than financial crime indicators. The modified stretcher bar design exploited that inspection orientation with considerable technical sophistication. The bars were constructed to pass X-ray screening at standard sensitivity settings, a determination that, investigators noted, implied either prior knowledge of CBP screening protocols or empirical testing of those protocols through prior successful shipments. The investigation identified, based on the shipping records seized from Meridian Cultural Logistics, that at least 47 shipments from Mexico through the same corridor had passed through U.S. Customs over the 6 years prior to the investigation. Investigators estimated that the October 2019 controlled delivery was the first time any of those shipments had been subjected to the enhanced physical examination that revealed the currency concealment. The third aspect concerns the organizational structure of the scheme. Specifically, the division of labor between the gallery's legitimate art business and its criminal function. Aldrete-Garza's gallery operated as a genuine art dealer in parallel with its laundering operations. It acquired and sold real works, maintained real professional relationships, and generated real revenue. The criminal operation was layered on top of the legitimate business, and the two streams were by design difficult to disentangle. This structure served both a legal and an operational purpose. Legally, it provided cover and alternative explanations for financial activity that might otherwise attract scrutiny. Operationally, it gave the laundering enterprise access to a professional network, a regulatory standing, and a public reputation that a purely criminal front would not have been able to sustain over 7 years without detection. This design feature, the use of a genuine, professionally credible business as the vehicle for laundering, rather than a hollow shell company that exists only on paper, is documented in several other cases in the federal record as a characteristic of more sophisticated laundering operations. The sophistication comes at a cost. It requires the operator to maintain the legitimate business at a level of professional competence that attracts no suspicion, while simultaneously managing the criminal logistics that the business conceals. That maintenance burden, investigators have noted, is itself a vulnerability. It requires more participants, more documentation, more operational complexity, and more people who can become cooperating witnesses. CS1, whose cooperation was central to the prosecution of Aldrete-Garza, was identified in sealed proceedings as a participant in the legitimate side of the gallery's business who had become aware of the criminal operations and had contacted HSI through a private attorney. The record does not describe the specifics of CS1's decision. It records only that CS1 approached law enforcement voluntarily prior to any arrest action in the case and provided information that materially advanced the investigation's timeline and the evidentiary package supporting the charges. The physical evidence, the financial forensics, the intercepts, the controlled delivery, the cooperating witness, each of those elements, viewed individually, was significant. Viewed together, they documented what the prosecution's sentencing memorandum described as one of the most complete records of art-based money laundering methodology available in the federal case archive. The record, according to that memorandum, demonstrated with clinical clarity how cultural infrastructure, professional reputation, and regulatory exemption could be combined by a sufficiently capable operator into a financial instrument that, for more than 7 years, moved the proceeds of drug trafficking into the clean economy without triggering a single mandatory report. Federal Record 12K is closed. The gallery on East 67th Street was sold in the course of the forfeiture proceedings and reopened under new ownership. The Long Island City storage facility was cleared and returned to commercial use. The stretcher bar modification workshop was documented, photographed in its entirety, and then dismantled by investigators as part of the seizure. The tools, the drawings, and the material samples are maintained as evidentiary items in federal storage. The $94 million. Some of it is documented in forfeiture orders, some of it has been traced to assets recovered and liquidated. A portion of it, investigators have been candid in their public statements, passed through the gallery's network in forms that, despite the completeness of the overall case, were not fully recovered or accounted for in the forfeiture proceedings. It moved, through the mechanisms this file has described, from the distribution networks of the Jalisco New Generation Cartel into the art market, into shell companies, into real estate, into wire transfers recorded as legitimate business transactions, and into the accumulated wealth of individuals who spent years presenting themselves to the world as people who cared about culture. The paintings, for the most part, were just paintings. The money was always somewhere else. End of Federal Record 12K.